Hello everyone. So today's video is about the FUD, fear, uncertainty, and doubt rumors created about crypto.com. And in the aftermath of the FTX exchange collapse, there's a lot of speculation that's been made about crypto.com, and it's going to be the next FTX to collapse. And a lot of these rumors are unfounded, and I had explained it in a few of my Twitter threads and on point by point detailing what the rumor was and what the actual fact was. Today we're going to be looking at some facts and drilling into how much of this is true and whether there is a concern and is crypto.com a safe exchange or not, and a comparison mainly between the fall of FTX and crypto.com. So again, disclaimer and warning, I'm not an investment expert or a financial advisor. None of the content of my video should be taken as a financial advisor or investment expert. And also another point that I always make is that never send your money or crypto to somebody else to invest for you. Your money you invest, because most of these people are actually frauds. And I'm active on Twitter, and I'll emphasize this point at the end of this video as well. My Twitter handle is @Chennai_London. In fact, today's video is probably made about 3 Twitter threads that I made on crypto.com. So in the prelude to this video, right? So the crypto climate right now is that I've made 2 videos originally in Tamil, and I now made them in English as well. It's about the collapse of FTX. It's made in 2 parts. And I'll give you the links to these videos as well to understand what led to the collapse of the FTX exchange, right? So we saw that FTX have actually stolen the customer funds, customer assets for their own benefits. They've been trading with it, and now they have filed for bankruptcy, leaving all the customers of FTX in a big problem right now. So FTX was the second largest exchange, and Sam Bankman-Fried, SBF, was the poster boy of crypto, and with his corruption and fraud, he's actually taken the crypto industry back by almost 2 years as per the industry expert. And this is like, people like SBF and Do Kwon have done so much damage to crypto right now that everything that has been thrown out at other exchanges and parties are like a knee-jerk reaction, part knee-jerk reaction, and part of it people are believing it because if these 2 exchanges have collapsed, or these 2 ecosystems have collapsed, which people had relied on at one point of time, what's stopping other exchanges from collapsing? And it's so easy to spread a rumor around some of the exchanges specifically. And there's also the industry competition as well. That's another angle that needs to be taken into account. So what I did was I created 3 different Twitter threads, and I had explained, and this is what I'm going to go into detail today because people wanted a bit more easier explanation on it, like a TLDR version. So first of all, we'll not blindly defend crypto.com. A lot of comments have been made about Zero Fam and just blindly defending it. I'm not going to blindly defend it. Let's go into a rational discussion. So we need full transparency for sure. So what are the main concerns? When I started the preparation of this content, there were like 4 or 5 different key allegations that were being made. One is a SHIB token balance, massive layoffs at crypto.com, influencers just posting withdraw without any rationale, Ethereum sent to the Gate exchange, there's a cold wallet inflow explained, and then there are a few more which we'll go into the later point of time. So first is, after this FTX collapse, Chris, who's the CEO of crypto.com, he shared a Nansen portfolio. Nansen is a online dashboard which can reflect the content of a cold wallet or an address in an online dashboard. This is not a this is not a snapshot at a point in time. This is an online dashboard where you can see in real time what's the content of a particular address or a cold wallet, for example. So they shared this Nansen portfolio in transparency, and you can see in the Nansen portfolio there's 20% of the cold wallet of that particular cold wallet, which was 3 billion at that time. Now it's about 2.5 billion because of the fall of BTC, is about 20% is made up of SHIB. And this caused a lot of influence to say that why is crypto.com holding 20% in SHIB? Why is a major exchange holding 20% of meme coins in their cold wallet worth 3 billion tokens? And this, even some people claim that they did an extensive analysis to find out that SHIB balance is about 20% in crypto.com, as if they had investigated and found out. In reality, actually, if you go and click I'll give you the Nansen dashboard link as well. Even I had shared it in Twitter. If you go and actually click on it, you will see this clear dashboard which already tells you that SHIB balance is 20%. There's no need for any investigation or extensive analysis. So a lot of these blockchain new experts, claim that they did the analysis. So what's the reality? Why do they have 20% of SHIB? In reality, they are maintaining the customer assets 1:1. So in episode 35 last year, when SHIB was making waves, in fact, we started talking about SHIB even before it was being listed on centralized exchanges. So a lot of people had bought SHIB in many of the crypto exchanges, and Crypto.com is basically maintaining all of these user tokens as 1:1. They do not convert. If you buy SHIB, they don't convert it for you into USDC or USDT and store it. They just store it as SHIB. Basically, if you go to the bank and you put in your safe locker gold or silver or pearl, or if you put in an iron bar, they're going to their duty is to basically store it as an iron bar. Their duty is not to convert your iron bar into steel or gold or whatever it is. So that is exactly what Crypto.com are doing. They are storing their customer deposit as is 1:1 secure, as you would expect any crypto exchange to do. In fact, this is not what FTX did, and that is why they are in a problem right now. Right? So this is, again, it was common sense. Once you understand that if the customer deposited SHIB, then they have to store it in SHIB. That is why 20% of that cold wallet is SHIB, because so many customers are holding SHIB in Crypto.com exchange. And a lot of these influencers who are attacking Crypto.com basically deleted their tweets. Some of them even apologized, but the damage was done, because once a person with 100,000 subscribers or 100,000 followers, if they tweet or if they say that there's a disproportionate amount of SHIB being held by Crypto.com, that's what stays. People don't realize that they have already deleted their tweets, they backtracked on their words, and they have done no analysis whatsoever. They don't realize all of this. The perception damage is already done. That is exactly what these influencers were doing at that point of time, with no rationale whatsoever. So this is the first point, and this is how the entire thing goes basically. So again, massive layoffs. There were a lot of influencers tweeting about the fact that Crypto.com is, or not even fact, the point that Crypto.com is actually doing a massive layoff. 50% of staff have been laid off, and Chris had to confirm that no staff reduction exercise has been done after July. That's the last point when we had done it. And most of these influencers again went back and deleted their stories. And again, these are not facts that you can hide under the blanket, right? If a major exchange or a major organization is doing a staff reduction exercise, it will come in the news. It will become very evident that they're doing it. So he was very clear in saying that the last one was done in July, and we haven't done anything after that point. Again, these are perception damages that people were doing, and a lot of influencers were just posting, "Not your keys, withdraw it," and just creating panic. In fact, I have been making content over the last 1.5 years, from my episode 22-23 onwards, on how you can safely move your funds from centralized exchanges to non-custodial wallets into your own DeFi wallets, and why you need to move your funds to DeFi wallets, and how the DeFi passive income is much better than keeping your funds in centralized exchange. I've been advocating about moving into the decentralized wallets, for example. So, but I've said it with rationale, and there is we'll come back to this point again, but the panic that they were creating was like blind panic, no rationale, no explanation whatsoever. The one allegation that had real substance to it was the Ethereum that was sent to the DYOR exchange. This was the real question. This happened in October. This actually was a blockchain analysis. A person called Connor actually did the blockchain analysis. Nearly about 320,000, a few million worth of Ethereum was sent by Crypto.com to a Gate.io exchange address, and then it was returned back to CDC. So Chris had to then come out and explain that the Gate.io exchange address was actually a whitelisted address that belonged to Crypto.com. So instead of sending it to one of their cold wallets, they had by mistake sent it to another whitelisted address that belonged to CDC, but that was an exchange address that they had maintained, the corporate address that they maintained with Gate.io. So this was a mistake, and once they realized the mistake, they returned it back from that address to CDC, and then they put it back into the cold wallet. This is something like, if you have a bank account in HSBC and if you have a bank account in ICICI, Instead of sending it to your HSBC account, you send it to your ICICI account. Like for example, if you go to transfer and it shows you two Anands with the name, because that's how you give the nickname. If you've not given the nickname correctly, or if you've not named it correctly, there are times where you make a mistake and you send it to one of your own addresses or own bank accounts, but to a different bank, for example. This is what happened. This is a mistake. But what should have happened is they should have transparently admitted that we made a mistake. Given the focus that we are all in, given the climate that we are in, such mistakes should be transparently admitted immediately after it happened. If it had been addressed in October itself, people would not have been able to pinpoint it, or make it 10 times bigger than what it was, for example. In fact, one of the stories that was spun around this fact was the fact that proof of reserve snapshot was being taken, and then they are returning the crypto back. So basically the same crypto is being taken as a snapshot in multiple exchanges, and it had no truth behind it, because the proof of reserves that Crypto.com gave was basically a Nansen portfolio, which is an online link, which is a real-time link. And Gate.io, on the other hand, are working on Merkle tree proof of reserves. Merkle tree proof of reserves is like almost an industry standard proof of reserve, which doesn't work on this kind of just transfer, take a snapshot, and then transfer it back. So a lot of it was again without any basis behind it. So one of the real questions that again was asked was a person by Adam was asking, what's the rationale behind the transfer route, deposit route into these cold wallets? And there are only a specific list of addresses that are able to, or that are transferring into these cold wallets, and what's the explanation behind it? And Chris had explained this, and also in his AMA, that they have a strict policy about whitelisted addresses. Unless and until an address is whitelisted, they cannot deposit into their cold wallets, or they cannot transfer into their specific wallet. And this is again for security, that not any Tom, Dick and Harry can transfer or in or out into their cold wallets, or can touch their cold wallets. It needs to be a whitelisted address. It's basically an additional control, and that kind of explained the rationale behind the mistake that was made. But again, it was still a mistake at that point, right? So another FUD that's been created is about the CRO token itself, about how it's an exchange token. It's being compared to the FTT token of FTX exchange. This again, Chris addressed it in his AMA more clearly, which we'll talk about later. But in one reality that people are conveniently forgetting is that CRO is moving more and more from an exchange token into a blockchain token, like Ethereum, like Avalanche. The Kronos chain has become almost a separate entity on its own from the Crypto.com exchange, and the CRO's main utility comes from the fact that it's a gas fees token on the Kronos chain. And a lot of the passive income earning, or a lot of people have actually moved their CRO from the Crypto.com exchange to the Kronos chain. In fact, I had also tweeted, when Crypto.com as an exchange was reducing the rewards that they were giving in terms of CRO for their Visa cards, their income on the exchange and the app, I was also saying that this is more sustainable because they need to move it more and more to the Kronos chain. So again, this is another thing that people had not thought about rationally in terms of the FUD created against the CRO token. Another big point that Chris made during his AMA was about the fact called hedging. What is hedging? Or he was explaining hedging, but I thought in his AMA that was one point that wasn't made very clear to people. To understand what is hedging, why it's needed to be done, and what it meant for the $1 billion that Crypto.com transferred to FTX over a period of 1 year. So a lot of people allege that it was actually a money being transferred for reward hunting for the high interest that FTX was giving. And Chris just explained that it was about hedging, but it wasn't very clear. So let's see what hedging is, right? In episode 5, which I made both in Tamil and English, I've explained about derivatives. A lot of people who had no clue about derivatives saw the simplified explanation on that video about what derivatives are and understood very clearly what is derivatives. But we'll again explain it in this video in the context of what hedging is, right, with regards to Crypto.com. So the commonly used derivatives that people are aware of are the longing or shorting of an asset, leverage trading, commonly called perpetual leverage trading, with like 10x to 100x leverage. So there is another form of derivatives, which is what the exchanges use in terms of different hedging options. We even talked about hedging in that episode 5 in a different context, but Here we'll talk about hedging options like put options and future options to eliminate the market risk. This is almost like an insurance option to protect against the fall of a token price. So like we have an insurance company that protects goods and tangible assets, we have crypto hedge funds. In fact, we used to have hedge funds in finance, and many of these traditional hedge funds have also now started offering crypto hedge funds. And these days, the concept of hedge funds actually existed much before crypto, and now they are also offering crypto hedge funds. How do these hedge funds operate? They are practically similar to an insurance. They take the risk for a small cost, like how insurance companies take a risk for a small cost. Crypto exchanges can buy these options and futures on high value tokens from these hedge funds at an insurance price, and they are protected in case the price of that particular asset falls or crashes. So let's see one example. For example, if Bitcoin is at $20,000 and you buy an option to sell exactly at $20,000 for a period of 1 year, let's say for a $200 cost. In case the price crashes within that 1 year, if the price crashes to $10,000, if you hadn't taken this option or you hadn't hedged it, you would have probably been at a loss of so many dollars. For example, if you held X number of Bitcoins. But if you need liquidity and you need to sell it at that point of time and you can't hold it anymore as an exchange, then you can exercise this option. You can sell it for $20,000 because you bought an insurance option in the form of hedging as an option. So it's like it says, the name says, right? If you don't want to sell it, that's good too, because if the value is about $20,000 for the entire year, if it's 30,000, 40,000, then you can already sell it for a profit. You don't even need to exercise an option. So that is basically just like an insurance. If you are in an accident, then you use it. If you're not having an accident, then actually it's good, right? So that is how the comparison is. So now by doing this, they're protected against the volatility of the asset for a period of time. So this is basically how the exchanges need to maintain liquidity and make sure that they need to maintain a holding of Bitcoin. They need to maintain a portion of the other assets to be able to provide liquidity to the users in case they want to buy it. And these are major assets and major quantities of assets that they need to buy, and by hedging it, they are actually protecting against the price drop of the asset for a smaller fees. And this is how in the AMA, Chris was saying that they are market neutral, or this is their market risk elimination strategy. So why don't they do it themselves? And typically, the crypto hedge funds are coming into picture to offer this insurance because they're completely different business. Hedge funds are fundamentally derivatives trading. So in reality, exchanges should not trade. It's like mixing two different things completely, right? Being in a bank and then also using the bank's money to do something like a risky business like mutual funds or investment or like an insurance, right? It's kind of a risky business. So derivative trading are an extremely risky business, and crypto hedge funds obviously operate this. That's their core business, and they are isolated financially by having that as the own business. So like I said, bank versus insurance. If a bank operates both a customer funds bank and an insurance, and if they take the customer funds without their knowledge, without their consent, and then they operate the insurance and then they fall down, then the customer funds are lost. That's a risky business. So this is why, if a bank actually does it, the insurance will be like a third party that they've just acquired from a brand name perspective. And even then there'll be extreme auditing needed to make sure that you're not using customer funds without their knowledge, right? So, which is another reason why Crypto.com doesn't operate a crypto hedge fund. And you can see a list of big crypto hedge funds in this Capital.com crypto hedge funds page. In fact, the risk is so high with regards to crypto hedge funds that I can't even access this page from UK because the Financial Conduct Authority banned the derivatives trading in UK for crypto. This is also another thing that I explained in that episode 5. So I have to actually use a VPN if you want to even access some of these pages with regards to crypto hedge funds. So this is important because to purchase these crypto hedge funds across all of these crypto hedge fund providers, Crypto.com will be sending tokens to them or will be sending USDC to them to purchase these insurance products or options. And that is what the $1 billion accounted for in terms of why they were sending $1 billion to FTX to purchase these options for the crypto hedging perspective. And why FTX? Because FTX is also, as an exchange, they were also doing derivatives and hedging, but they were having certain tokens which were only provided by FTX, like Ray, Solana, for example. They were being only provided by FTX, and so it needed to be hedged with FTX as an exchange. There weren't that many other crypto hedge funds like Bitcoin and Ethereum. There were more crypto hedge funds, but this one was specifically with FTX. And the exposure that remains with FTX is only $10 million. So these were not user assets, these were not yield bearing assets that were sent to FTX for high interest, and that's what Chris explained in his AMA, but it wasn't very clear in terms of what he meant by hedge funds, and that's why I kind of explained it separately. So now let's look at Chris's AMA, where he addressed a lot of these questions. So the live AMA with Crypto.com CEO Chris Mazalek happened on November 14th. I'll give you the full 41-minute video link in the description. It's on Twitter as well. So one thing to remember about it before we go into it is that during the Luna fall or the FTX fall, if you remember Do Kwon or SBF, they never came into a live discussion, or they never came and talked with so much of confidence in those days. In fact, they actually went into hiding for like a few days. SBF, in fact, is tweeting obscure tweets right now, and he's actually not making any sense. They haven't made any strong statements like these coming out and talking with confidence, and that itself goes to show the confidence that they have as an exchange, right? So I will not go into the full 41 minutes because he talked about a lot of factors, but the key points that I felt that needed emphasis from his AMA, right? So the main point that he talked about was a difference between FTX and Crypto.com in terms of the size, the approach, the revenue, and the risk. And this is very important to understand why Crypto.com will not collapse like FTX. So from a size perspective, Crypto.com has got 70 million users, which are mainly retail users who are making an entry into crypto. FTX, on the other hand, had about 1 million users, of which about 10,000 pro trading users were really active. That's their active user base, right? So even obviously Crypto.com wouldn't have all 70 million users active, because a lot of users would have come just for signing up and just getting an entry, and they may not be actively trading. But the comparison in size is huge. It's about 70 times bigger than FTX in terms of the user base. Even though FTX was the second largest exchange, that was because mainly the pro trading users were using the FTX exchange approach. So again, it's just following up from the CDC's approach is to get people at an entry level into crypto. It is to enable people to get into crypto, whereas FTX was a core derivatives trading platform. That is their main business. The revenue of CDC comes from what he talked about as a brokerage models, right? So it's just to take fees from enabling the users to get into crypto, and also the cost of covering that in terms of hedging and hedge funds, so that they remain market neutral from a risk perspective. Whatever assets that the users are buying, those are maintained 1:1. Apart from that, to provide liquidity to those assets, they are also doing a crypto hedging. And to do all this, they just take a small fees from the users. This is where 95% of their revenue comes from for Crypto.com, exactly like Coinbase. And that is one of the reasons in my videos, there are only 4 or 5 exchanges that I've talked about as personally having used, and I provide the links in my description. And the reason why I say Crypto.com and Coinbase are like the best exchanges for new users is because the ease of use with which access to which you have you can get into crypto, and as a new joinee or a new beginner, how easy it is to get into crypto with those exchanges. And again, FTX's main revenue came from the high risk perpetual trading fees that they were getting from their users, and they were also doing perpetual trading through the Alameda research, which we talked about in the FTX stories. And risk, this is a big element, right? It's got several elements into it. Mainly, Crypto.com had never indulged in trading with their money or with customer assets. They never traded. As an exchange, they never traded. They provided the option for users to trade, but they never traded themselves like FTX was doing, either with their money or with customer assets. First of all, if they're not trading with their money, they wouldn't have traded with the customer assets. So there was absolutely no loan that Crypto.com had taken from anybody, right? Any third party, or they were not even lending to third parties with high risk or high collateral or a illiquid asset, for example. And again, they were not offering risks like we already talked about. They were not offering high risk products like hedge funds or anything. And they had $1 billion in revenue in the last couple of years, every year, and they were cash positive. They had always maintained a cash positive reserves as a company, right? So they never needed to take a loan or a high risk to get money from another company, or to use CRO as a collateral to get money. And this he emphasized again. And to talk about the risk perspective, right, Crypto.com, Chris has emphasized this very clearly. They were one of the very few exchanges in the world that had zero exposure to the Luna debacle. That was because they were probably one of the only big exchanges that never listed UST as a currency, knowing how risky UST was a stable coin. So when we spoke about the Luna's fall, right, we talked about how UST was the most dangerous stable coin at that point of time, and why we had never talked about UST as a crypto in this channel, or Luna for that matter. And however, every other exchange, including Binance for example, were listing UST, and they all had an impact. Crypto.com was probably the only exchange that did not list UST, despite the fact that every other exchange was listing it and making money from it. They stayed away from it. This is like, they were getting, if you had UST and if you put it into Luna's ecosystem, you're getting 20% interest, but they stayed completely away from it. And so that is showing how risk averse they were, right? So, and again, hedging, we talked about it. So he explained that how they are remaining market neutral from a risk perspective by doing hedging. This is something that wasn't clear in his interview. That's why I explained it separately before getting onto it. And again, there is a Twitter thread where I had shared the full details, and I'll share the links to those 3 Twitter threads again. Another big point that he made was with regards to the yield hunting opportunities in FTX that people were alleging that Crypto.com is sending the money, right? So, which was made with zero evidence. The blockchain was showing that the money was being sent, but there was zero evidence that was being sent for the yield hunting. So, when Chris explained that it was because of the crypto hedge funds, specifically because of assets like SRM, Ray, Solana, which were practically only offered by FTX, that made a lot of sense. And that is where the theory about this yield hunting and exposure all completely fell down, and no more allegations were being made about it once people understood it was for the hedge funds. And that was a bigger story, right? So eventually Chris said that the final exposure in FTX stands at about $10 million, which is literally less than 1% compared to the revenue and compared to their cash position. So another FUD that he addressed was the Ethereum that being sent to Gate, which we talked about in terms of how it was being confused to proof of reserves and what that mistake was. So again, it was a mistake, but like we've already talked about, it was a whitelisted address and should have been transparently shared at that point itself, and it would have killed the entire story at that point. And finally, he also talked about CRO as a token. So he explained how they've never used CRO as a token for collateral to take loans. In fact, they've never taken loans, but they've never used CRO as a collateral for anything, right? And they had burned, when Kronos was being launched, we had even covered it in episode 22 and 23, that they burned about 70 billion tokens in their journey to Kronos as a blockchain token, right? And Kronos has got about 400 projects that are building, and every day new projects are being built on Kronos. And it's becoming a blockchain that is getting more and more adoption every day. And it's got close links to the wider Cosmos ecosystem because it's built on the same IBC concept, Internet of Blockchains concept, right? So once the IBC bridge opens up, it's probably going to get more adoption in the wider Cosmos world as a blockchain. So apart from the fact that the CRO is a exchange token, it has actually grown into a blockchain token, which is what we talked about earlier as well. And another fact that people were making, another rumor that people were spreading was withdrawals have stopped. But in reality, the fact was that the withdrawals had never stopped. There was an online web page called status.crypto.com that you can visit anytime, and you can see whether the withdrawals are active or not. 24/7, that page is kept active. And it depends on the network congestion, depends on blockchain with which you withdraw, how much time it's going to take. Even before all of this, we've talked about in our Ethereum episodes where some of the Ethereum transaction takes like 5-6 hours, for example. So it's blockchain congestion when everybody is withdrawing on one particular blockchain. But I did withdraw on Crypto.com, I withdrew on Kronos chain and a few other chains which were fast, and it took about 50 seconds to 1 minute in many of the chains as a test withdrawal that I did. And it went through seamlessly for me, and these were my whitelisted addresses. So having said all this, my subscribers will know that I've been devoting 25 episodes in the last, from almost episode 22 till about episode 50. Now we are I've been providing like about 40 hours of content, educating with demos and explaining the benefits of moving to decentralized finance and how decentralized finance is the future and why people need to move to decentralized finance. So I'm completely for decentralized finance and in non-custodial wallets where you need to maintain custody of the assets. But again, there needs to be a balance, right? So if you need to bring new people to crypto and give them an easy entry for them, so you need a simple tool like an Amazon-like tool for entry into crypto, and that is only possible with centralized exchanges like CDC and Coinbase. Before they even understand the concept of blockchain fully, and then EVM, and then all of the concepts behind moving into DeFi, they need an entry point to crypto, and that is only possible with exchanges like CDC and Coinbase. In the aftermath of FTX, we really need to be careful and make sure that we don't spread these rumors and unnecessarily cause damage and cause confusion with regards to people in terms of the reputation to crypto itself. This is the time to rebuild, and this is time to stop all this FUD and educate people and get educated, I would say. Again, create a Twitter account and follow important people. Even if you don't follow me, there are a lot of people who are tweeting good content, and look at the people who are not spreading FUD and who are busting these FUDs, right? So I tweet most of the time in English, and you can follow me. And I made this comment in the Tamil video that if you're speaking a different language, for example, if you want this content to be translated in Hindi or other regional languages, you can always go to translate.google.com and put it in paste it in that page, and you can see the English content being translated into the regional language so that you can understand it better. And a couple of accounts that I had suggested for the Tamil audience were Crypto Tamil Manu and Crypto Pugal, and there are probably other people who are doing it in other regional languages. Sometimes it is better for the people from different parts of the world to listen to the content in their own language, because then they understand it better. So again, stay educated, and being educated in crypto is probably the most important thing at this point in time. Hopefully you found this useful. Until next time, thank you, bye.